Hi everybody, my name is Tom. Welcome back to another issue to Reflections. Today I will talk about some notions of the cash flow of an enterprise, or of any business in particular, which is nothing more than the cash movements that is generated and transferred over time with each operation. But how is this? Yes, in this topic I will explain in a simple way what accounts receivable, accounts payable and inventory management mean. In my book Yo Empresario, I call them the three Marias, because if they are not well managed, they are sources of headaches. First of all, we must say that cash flows are generated by the operation of the business. They are measured by specific periods, whether by month, by quarter, by semester, or by year. These operations are recorded in the financial statement called the profit and loss and contain the income that was generated, and the expenses that were paid. I must clarify that the idea, in this case, is that you can dimension the scope of this important topic as a simple planning tool, and not make cash flows as such. Analyzing sales, or as it is called in this case the source of cash, for example, you must consider the type of customers you handle, if they are frequent customers, sporadic customers, corporate customers, their ability to pay, etc. It is important to make this definition because it will depend on this to use a correct strategy later on. You can use discounts in promotions, discounts for volumes purchased, offer credit, and give discounts for prompt payment, among other strategies, which you can use to get closer to the conditions proposed by your customer. For sporadic customers the sales strategy would obviously be cash. For frequent and corporate customers you could use the figure of credit, or discount for volume purchased. Understand one or the other, not both. Then, the strategy of discounts for prompt payment is applied to customers who initially bought on credit, but who need cash in the short term, and the customer is contacted to offer a lower price if he pays the debt at the time. Finally, there is the occasional promotion to get out of a seasonal product, or with products with low turnover, etc. For all the above cases, it is necessary to make financial planning that allows managing the different price bands, according to each situation, discount by volume, credit payments, etc. However, nowadays in Venezuela, it is practically impossible to offer a product or service on credit, given the high inflation rates and the loss in exchange. The option of volume discounts also becomes risky, due to the same inflationary situation and the issue of inventory replacement. The same can happen with your debts. You must analyze your suppliers regarding their payment conditions, the percentage of sales they generate, management of guarantees, etc. All this influences your financial planning, since it will allow you to be up to date with your payment commitments, a fundamental factor for future credits with suppliers. In the beginning, it is advisable to make cash sales operations, that is to say, cash, because it is very probable that the suppliers use the same policy, which means that at some point, in the timeline, the financial aspect will be complicated if the payment is not collected at the moment of the sale. An example could be the products of a particular supplier that generates a significant percentage of sales. In this case, the lack of payment of their invoices puts the operation at serious risk because the cut of its supply would put the business in serious trouble if the supplier decides to stop shipping for lack of payment. I share with you some important reflections on what I have explained so far. Accounts receivable are the financing of goods or services to customers, while accounts payable are the financing given by suppliers to the business. An enterprise that has more accounts receivable than accounts payable, for long periods of time, will be for sure in a clear process of decapitalization. Sales only correspond to half of the work when they are on credit, the other half is when they are collected. Some entrepreneurs get excited about sales, with the reality being the share that is in the bank. The money in the bank account does not reflect success, it is an illusory effect, which does not allow to see the debts to be paid in the short term, and generally those resources are diverted to other directions. The issue that remains to be explained is the management of inventory, a complex issue because it is a product of friends of others, on the one hand, and on the other hand, the preferential treatment of some products, depending on their degree of elasticity, that is, the quantity of the product in the market, and its price. At this point, as I have explained in other opportunities, it has to do with the optimization of the process, that is to say, an optimal inventory guarantees the best possible cash flow, but that takes control of processes, along each procedure, since it is received until it is invoiced. Throughout the whole process in a retail store, there are people who receive the merchandise, people who process information and enter it into a system, then the closing process, with the invoicing and the handling of guarantees. The other important point is the periodicity and seasonality of the product, which allows having it available throughout the year and in the quantities required by the market. For this, it is necessary to make periodic and random controls, to measure the shortages of each product, and to generate the necessary data for a better budget. This particular topic is available in the book Me Entrepreneur, which is in its second edition. The issue of cash flow came to an end. Soon we will be offering you another topic of interest. Remember to ring the bell to keep informed. This video is a courtesy of the book's Me Entrepreneur, second edition, a step-by-step book for undertakers, and 500 notes for ventures. Read and reinvent yourself. They will give you great value for your project. It is a mistake not to have them. They are available at Amazon Kindle. Until a next opportunity. Thank you very much.